Hi, everybody. This is Darren Fisher. Welcome to the Market Roundup for Thursday, January 26, 2023. So let's take a look at what the markets did today and see it was a nice update from for the most part. The Dow was up 0.6%, S&P was up 1.1%. The Nasdaq had a great day, up nearly 2%. The Russell was kind of lagging here, which is kind of funny because the Russell has been leading in the broad markets, but it was only up about 0.6% itself. Oil was up 1.1 and gold was down 0.65. As far as daily news go, the GDP quarter over quarter came in at 2.9% versus 2.6% estimates. Durable goods month over month, this is the really big beat here. 5.6% when the analysts were thinking it was 2.4. So these two pieces of news, I think, really helped drive the market today. And we can see here on the S&P, had a good day. Yesterday we had bounced off the 50-period moving average here, and there's a little bit of weakness throughout the day. But we found support at that 400 level, and you see that long lower shadow. The buyers came in. Now we're going to see this in another chart right here, and you have to be bullish. But the question is, how much more bullish can you get? Because we're coming up on resistance here at about the 408 to 410 level on the S&P, and it's going to take a little bit of exercise for the market to break through that. Kind of the same situation over here at the Nasdaq. Again, you can see when we're pretty close to resistance right now. We've got a little ways to go, but the market action looks the same. Thinking about it, you've got the market action is a little further away from the 50-period moving average on the Nasdaq than it is on the S&P. So where we'd seen some weakness several months ago in the Nasdaq, it looks like the Nasdaq is now flipping around and may actually start to lead the market. You can see here on our heat map, the market did pretty well overall. I mean, technology had a good day right there. Energy had a good day. Communication services and consumer cyclicals all did, pretty well. What was weak today, it looks like consumer defensive as well as healthcare. Some financials took a little bit of a hit, but healthcare and consumer defensive were the ones where people were out selling in greater force. So let's take a look at our market outlook here. Going out to it, you've got to take a look at the action this week, and technically you have to be at a +2. We're above the 50, we're above the 20-period moving averages. The only thing that you take a look at, the slopes are inverted right there. Once the slopes aren't inverted, then you can get a little more bullish. Now I've got a monthly outlook here at a +1. And the only reason that it's not +2 or better right now is because I want to wait and see what we do with that resistance that we talked about just a little bit ago. If we can drive through that resistance, I'm happy to get more bullish. If we turn around or if we get range bound here, then I think +1's about as good as you can expect. So some potential trades out there right now. We've got on the bullish side, you've got BIGC, COHR, OII, PBF. Neutral, you got NI, PPL, Yum Brands, YUM, BBY. That's Best Buy right there. Bearish trades, though, you probably want to get a little more balanced in your portfolio. Is wait and see what we do with the resistance that we're coming up on. ARWR, Pfizer, PFE, GIS, this is General Mills, and then Procter & Gamble as well. Some potentially bearish trades. So let's look at a couple of these in detail. You can see this is COHR, and it broke through resistance about a week ago at that 40 level, 42 level right there. It's right now at 45, nice high base. You can see that you're above the 50, you're above the 20. That 20 just crossed over the 50 about 2 weeks ago at the same time we were breaking out. So this one looks like it's made a little bit of a run, but it's been nice and steady. So this is one that I'd be more than happy to play up to the 45, 47.50. For a few weeks right there. If you want to get a little more aggressive, you could do the 45.50s. It just depends on where you want to position yourself in your portfolio. This is OII. You can see this one had another high base, and it just broke through today. Nice long lower shadow right there. This has been steadily going up. We were in a little bit of a range between 18 and 20. Broke out of that today. 20 was resistance prior to it. So this is on the beginning of another bull run, it looks like. So I'd be happy to take a look at this one. Probably a profit target about the 22 range, maybe 23. This is Pfizer, this is PFE, and this has been going down for a couple, since about the middle of December right now. Really started to break down, a couple really good down days right there, and you can see it just looks weak. I mean, it's sitting at a little bit of support right here at 44, but it did at one point in the day break through. Downward profit target on this one, I would say would be 42. If you want to wait for it to break below 44, that's a very safe way to do it. Or you can do some sort of mini diagonal on it, and go long those 45s, and then short this week's 44s or next week's 44s against it, and go from there. Or you could just do a straight 44, 42 bear call spread. This one's Procter & Gamble. You can see similar situation right here. We had a breakdown about a week ago, and it really is just looking weak. Right there, it's sitting at that 141 level. There doesn't look to be a heck of a lot of support there at 140. This just looks kind of like a way station where it's just hanging out a little bit. I guess you could say you did establish some support at that 140 level back in September of 22, a little bit more in November of 22, but it looks really tenuous right here. So I would expect this to go down. Again, I'd be looking at some sort of diagonal on this one. I think a good profit target here for in the next month would be that 135 level. So the market outlook for tomorrow, you have to be bullish, but just realize that we are approaching resistance. And depending on what we do there, if we break through, I'm happy to get more bullish. But if we do turn over at that resistance, I think I have to moderate my expectations and look to have some sort of a range-bound trade in my portfolio. Economic reports tomorrow, the core PCE price index. Now, this is what the Fed has signaled that they are looking at, giving a lot more weight than a lot of other things that they did in the past. So this is going to be a fairly important number for the Fed if it's wildly beyond expectations, or if it's hotter than expected, then I think that that could be bad for the market. I think you would definitely see a turn down right there. If it's in line or lower than expectations, I think that might actually be the juice to get us through that resistance. Earnings reports, we've got Chevron, American Express, Clorox, and Charter Communications. Those are the ones that people are going to be looking at tomorrow. So as always, watch your position sizes, watch your portfolio exposure, make sure you're doing good risk management, and good trading, everyone.